Welcome back to the channel. Are you poised to navigate the ever-changing financial landscape?
Today, we're diving deep into economic trends and stock predictions.
With contributions from financial powerhouses like Danielle DiMartino Booth.
Absolutely, she'll share crucial insights on CPI and what's next for the economy.
Following her, Chris Vermeulen will reveal market risks you don't want to miss.
And let's not forget David Lin, who'll provide his take on asset revesting.
Stick around till the end for a look at how you can prepare for what's next.
And remember, this content is here for educational purposes and not investment advice.
Today, we dive into the incredible legacy of Arthur Cashin, a man synonymous with the New York Stock Exchange.
His deep understanding of market dynamics has shaped not just trading, but financial strategy overall.
What made him such a revered figure in finance?
His insights and mentorship have been pivotal for many in the industry.
Cashin embodied resilience, not just in navigating markets, but in creating a framework for future traders.
Absolutely, and he remarkably adapted to changes, laying groundwork for a more robust trading environment.
What specific changes did he advocate for?
He was a proponent of integrating new technologies while retaining core trading principles.
Cashin often reminded us of the resilience seen post-2008 downturn.
How can today's investors apply those lessons?
By maintaining a long-term view and being prepared for volatility.
It seems mentorship played a crucial role in his career.
Indeed, he believed in empowering the next generation of traders.
That culture of learning is what keeps markets innovative.
Cashin was keen on the balance of leveraging technology without losing human intuition.
Exactly. Technology should enhance, not replace, fundamental trading principles.
Will this balance be a challenge moving forward?
Definitely, but Cashin's approach can guide us through.
Looking ahead, Cashin's influence on young traders will only grow.
Future initiatives will likely focus more on mentorship.
Do you think his methods will withstand new market challenges?
Yes, applying foundational principles will always be relevant. The essence of Cashin's teaching lies in adaptability and mentorship.
Absolutely. Those lessons resonate now more than ever.
So, for our viewers, it's about applying those timeless principles.
Exactly, and staying prepared for the unknown is crucial. Up next, David Lin takes a deep dive into Bitcoin's future.
Is that $1 million price point a reality, or are we teetering on the edge of a crash?
The anticipation is palpable. This is one you won't want to miss.
Bitcoin has crossed the thrilling $100,000 mark. Is the race to $1 million on?
That's the buzz, but there are crucial factors to consider as well.
Okay, but can it really sustain such high valuations?
Great question. David Lin offers insights into what's driving this rally.
David points out that institutional investment has significantly fueled this rise.
That's right. It's being likened to digital gold, with these big players jumping in.
But is this real growth or just speculative hype?
A bit of both. It's driven by market sentiment, but also reflects some underlying economic shifts.
Did you know that hedge funds are now pouring substantial capital into Bitcoin?
Absolutely. This legitimizes Bitcoin's status as an asset class.
So how does that affect individual investors?
It could mean higher prices and stability, but it also opens the door to volatility.
Market sentiment shapes Bitcoin's trajectory significantly.
Exactly. Positive news often sends prices soaring, while negative news can trigger mass sell-offs.
Isn't that risky for new investors?
Definitely. The volatility can be a double-edged sword.
What about regulatory factors? Aren't laws catching up with cryptocurrencies?
Yes, new regulations could either legitimize or hamstring Bitcoin's progress.
It's a balancing act. Too much regulation might scare investors away.
Right? But a clear framework could increase safety and confidence in the market.
So, what's on the horizon for Bitcoin?
Expect volatility. We could see sharp corrections following big price rallies.
How do investors prepare for that?
Diversification is key, along with setting stop-loss orders to mitigate losses.
A prudent approach amidst the excitement.
The main takeaway? Don't lose sight of strategy in the midst of excitement.
Right. Preparation can shield against potential downturns.
So, being informed is more critical than ever.
Absolutely. Investors need to adapt to changing landscapes.
Next, we're diving into alternative investments and how they can enhance your portfolio.
From collectibles to digital assets, the options are expanding.
You won't want to miss how these can play a role in your financial strategies.
The markets are ablaze today. Did you catch the buzz around Tesla's potential breakout trade?
Absolutely. The technical patterns are really starting to suggest that something big is on the horizon.
But is it just hype? Or are there solid reasons backing this move?
Great question. Let's break down the key indicators that could signal this breakout.
So, the underlying thesis here is that Tesla's price action aligns with favorable sentiment and solid technicals.
Exactly. The indicators suggest the makings of a substantial move upward.
What specific indicators should traders be focusing on?
Watch for the breakout above the $700 mark, which could attract momentum traders.
The current market sentiment around Tesla is overwhelmingly positive, especially after those earnings reports.
Right? And they've had some analyst upgrades, which definitely helps in building investor confidence.
Is there any risk of overvaluation at this point?
There's always that risk, especially with tech stocks. But right now, the momentum seems sustainable. From a technical standpoint, keep an eye on those resistance levels.
Absolutely, especially if we see a volume spike indicating increased trader interest.
And what about moving averages? Are they indicating upward momentum?
Yes, they're currently showing bullish signs as well. Definitely something to consider.
What are the predictions for Tesla's stock in the upcoming weeks?
Expect some volatility, especially around future earnings calls.
So it's essential to have a strategy in place.
Exactly, whether you're looking to capitalize on dips or aiming for longer-term gains. The bottom line? Keep your eyes on those key technical signals.
Absolutely, and don't get caught off guard by news.
It's about adapting to the current market sentiment. Always stay flexible.
Exactly. In this dynamic environment, being proactive is the name of the game.
Coming up next, we'll dive into how a recession actually starts.
This is critical for any trader to understand, especially in today's environment.
Definitely don't miss this insightful financial interview.
Recessions can come out of nowhere, right? What really triggers this economic downturn?
Exactly. The latest insights from Eurodollar University delve into what truly starts a recession.
But aren't recessions just cyclical? Don't we see them coming?
Well, that's a common belief. Let's unpack the nuances of recession triggers together.
The core thesis highlights that recessions often follow identifiable signals.
Right? And the complexities in those signals make them hard to detect until it's almost too late.
What are some of those signals we're looking for?
Typically, it's shifts in consumer spending and market confidence that precede these downturns.
Have you noticed how consumer spending has shifted recently?
Definitely. Declining retail sales show that consumers are tightening their belts.
But what does that mean for the economy overall?
Less spending can lead to reduced business revenues, triggering layoffs and a possible recession.
And it seems like market volatility often foreshadows larger economic issues.
So panic can actually exacerbate a downturn.
Absolutely, fear can lead to rapid sell-offs, deepening the economic woes. Looking at historical patterns can provide critical insights.
What have we learned from past recessions that might apply now?
For one, external shocks like oil price hikes or financial crisis can significantly impact the economy.
Sounds like we need to be vigilant about global events too.
Given the current indicators, where do you see the economy heading?
We could see increased uncertainty and potentially market corrections if signals worsen.
What should investors do? Just sit tight.
Not quite. It's about preparing for volatility and adjusting strategies. The essential takeaway here is to watch consumer behavior closely.
Absolutely. And don't ignore the psychological factors that influence the market.
Sounds like being proactive is essential.
Exactly. It's about adapting and forecasting as best we can.
Next, we'll explore what Craig Hemke has to say about gold and energy markets.
Don't miss these critical insights that could shape your investment strategy.
Exciting topics ahead. Stay tuned.
Have you tuned into Craig Hemke's latest breakdown of QQQ targets and energy predictions?
Absolutely. He provides a meticulous analysis that aligns technical indicators with market developments.
But how reliable are these predictions in today's volatile environment?
Let's uncover Craig's insights. There's a lot to discuss.
Craig emphasizes the importance of precise QQQ analysis for identifying growth opportunities.
Why is gold being mentioned amid these market discussions?
Gold typically serves as a safe haven during economic uncertainty, and its movement can signal investor sentiment.
What indicators is he focusing on for the energy sector?
He points to supply chain disruptions and geopolitical tensions as primary factors influencing energy prices.
Did you catch Craig's projection for QQQ targets?
He sees potential markets hitting 350 and even 370.
Exactly. The technical indicators point to strong bullish trends.
However, earnings reports could introduce short-term volatility.
Craig highlights the rising gold prices linked to inflation fears.
But what seasonal trends is he talking about?
Historically, gold tends to perform well in specific seasons, often around economic uncertainties.
Is it advisable to integrate gold into a diverse portfolio?
Absolutely, especially given its protective qualities during market downturns.
What does Craig foresee for the energy market?
He warns of imminent energy shortages due to ongoing supply chain issues.
How might this impact consumers directly?
Higher energy prices are likely, affecting everything from transport to household bills.
And this could accelerate the shift towards alternative energy sources. How should investors respond to these predictions?
Craig advises reallocating towards safe havens like gold.
What about emerging sectors?
Investors should also consider renewable energy startups as potential high-growth areas.
What potential global events could affect market stability?
Geopolitical tensions and inflation are expected to drive extended volatility.
How can investors prepare for this uncertainty?
A diversified portfolio becomes even more crucial in these times. The essence of Craig's message is adaptability in investment strategies.
Absolutely. Keeping an ear close to the market, signals can make all the difference.
Balancing investments is crucial amidst uncertainties.
Absolutely. A proactive approach is recommended.
Next, we'll delve into the mother of all blow-off tops.
This will feature insights from John Lara and Mike Preston.
An interview you won't want to miss. It's going to be eye-opening.
With the looming potential for the market's mother of all blow-off tops, it's time to get serious about investment strategies.
Indeed, markets are precariously high, and the longer they remain so, the more significant the eventual correction may be.
But what specific strategies can individual investors consider?
Let's break it down today.
We're not in an environment where we can simply ride out any volatility without a plan.
Exactly. Recognizing when we're near peak valuations is key.
Are we truly in a euphoric state yet?
Not quite, but thrill is definitely around the corner.
So what phase are we in now?
We've been in the thrill stage. Euphoria is just around the corner.
That's when the real risk lies.
How can one hedge against potential losses?
Options can be an effective tool for protection.
But isn't it complex?
Not necessarily. We simplify it for clients.
With the year-end approaching, what should investors do?
It's time to lock in gains and evaluate tax positions.
What about charitable contributions?
That's another fantastic way to optimize your tax situation.
What do the indicators suggest for the future?
While immediate outcomes may seem bullish, the long term isn't as rosy.
What's the immediate advice?
Prepare to pivot and be ready to act. The key takeaway is to remain vigilant and adaptable.
High risk can lead to significant regret.
It's about preparation and smart choices.
What an incredible range of insights we've had today.
I know, right? John and Mike brought up that potential market correction. That's some heavy stuff.
Absolutely. And Craig's focus on gold prices, a curveball that might just help investors navigate challenges.
Not to mention David Lin's take on Bitcoin's leap. Will it reach that 1 million mark or drop hard?
Oh, and the Trading Brigade had some energetic insights on Tesla too. Such a mix of opinions.
It's fascinating how they all agree on needing smart investment strategies. But boy, talk about differing timelines.
Right? Perfect example of why we always need to stay ahead of the game.
If you found today's conversation enriching, make sure to like and subscribe.
Every like helps us create more valuable content like this. Don't miss out.
Thanks for joining us, and keep exploring our other videos for more financial insights.